Good morning, everyone. And this is a new week where we're going to give you the latest market update and discuss whatever happened last week and what the expectation of the market, how you can prevent additional losses, and how you can make sure that you're protected from all the market conditions that can harm your account and increase your productivity and profitability. So, Noor, we can see that the dollar index, let's start as always with the dollar. So the dollar index, the support for the dollar index became a resistance, and we can see that the dollar index is currently trading at 103.17 after we got a low of 103, 102.17.
Yep.
We're still ranging within almost the same sideway move. It's not a big deal until now. I know that the expectation is that we're going to have another interference from the Fed in the next month. But do we still have the same percentages? Because as we were discussing last week, it was, in my opinion, it was kind of like an exaggerated move. People over panicked, or like they did a move that it wasn't supposed to be that harsh or that hard to the market.
Yeah.
So.
I mean,
Tell us
here's the
about
thing.
this.
We got some at some point from last week, the data that we were waiting. It was not too much, at least when it comes to the jobless claims, which eased back down. But that easing was most likely because the data were incomplete because of the Hurricane Debbie, and there's multiple states that were off, so they couldn't basically, take all the data. So this week's data will be more important. However, as you said, the percentages for the Federal Reserve intervention definitely went substantially lower, especially after jobless claims from one side. We had the services PMI from another side. So some of the data showed a little bit better than expected data. Now for September, it is still above a 25 basis point rate cut. Sorry, the percentage of or a possibility for rate cut is 150%, which means markets are expecting a little bit more than 25 basis point, which is we're talking about 35 basis point rate cut. But that's for the time being. Still, in addition to that, November is still on the table, December is still on the table, and also January. So the market's basically still pricing
We're
in
talking about three
three rate cuts,
interventions
not
this year.
two. Until even in January, it is basically expected for another 25 basis point rate cut. But for the time being, the 50 basis point has eased a little bit. But from now until September, we still have a lot, at least another because the Federal Reserve meeting is exactly in about 1 month. It would be on the 18th of September. So from now until then, there's a lot could be changed. But not to forget. This week tomorrow we have the CPI data that's going to give us more clues, if anything, that would renew, let's say, the turmoil in the market. If this would happen, if the CPI or the inflation data accelerated lower, meaning or we slowed down faster than expected. Expectations, at least for tomorrow, is to slow down at least when it
CPI
comes
is
to
on Wednesday. We're talking about the dollar, right?
Tuesday. Yeah, it is going to be Tuesday.
Tuesday, we have the core PPI for the
Sorry,
dollar.
the
CPI is on
the PPI
Wednesday.
on
We have
Tuesday.
both of them.
Yeah, the PPI on Tuesday, CPI on Wednesday. Estimates.
Yeah.
CPI is still expected to remain stable at 3%, but the most important one is the core is expected to slow down 3.2%. So any data below that would be considered as that inflation is slowing down faster than expected. It's still going to tell us that the Federal Reserve made a mistake by waiting too long. So this might renew the turmoil in the market. But so far, it's good that the market kind of adjusted to the recent move. Although we're still far away from record highs, it is still a possibility that this retracement will continue, but it will all be depending on the upcoming data.
All right, and we can see as well that the rest of the central banks around the world are taking action. We've seen the action of the Bank of Japan and the effect on the market, and how that affected all the carry trades and how it affected the stock market. and the panic that we've had in the market. So all of that panic that happened already, in my opinion, was a little bit exaggerated. We've seen some corrections since that. I'm still holding my statement. I'm not going to get back on this
You're happy with that.
because we stopped at a certain level. Okay, it was a good move. It was a certain move that we needed to have this, but it was a bit like an overstatement, and time will prove that. We've seen some corrections since that time. But what we care about is, let's talk a little bit about the new opportunities, or what are the things that we can benefit from this week. So we can see dollar yen trading around 147.19 after doing
it's back.
small correction, basically. Yeah, it's not a huge correction, because keep in mind we dropped from 162 almost 161.90, 162 to all the way to 140, 160. So it's a huge move down. So this is a simple correction so far. Do we expect dollar yen to correct a little bit more? Especially we're talking about this week. As long as we're trading above the 146.40, what do you think? I think maybe this is a possibility.
So the Bank of Japan basically decided to come out and started to say a few things to the market, which is it was a dovish tone, not during the decision, but also they sent out like multiple members of the Bank of Japan saying that it is very important to keep the policy easy still, even though that we might still need to raise rates again by the end of the year, but it's very important to keep the policy easy. So this is why basically, the dollar yen kind of retraced a little bit. You saw also Nikkei, after going down 20% in a matter of a few days, it went back up again, like by almost 10%. We did recover. However, markets are still in a position where we're not sure where the Bank of Japan is going next. We know that they're going to be raising rates at some point, but how much they will be unwinding when it comes to their purchases. So dollar yen is back to 147. I think this is another short-term upside, because go back in history, each and every time, whenever the unwinding of the carry trade, dollar yen actually, or the yen, continues to go for an average of 1.5 to 2 years. We're still in it. According to JP Morgan, 3/4 of the carry trade has been done. We still have a little bit more, but this means, again, the dollar yen might actually get a little bit more to the downside. I think the upside is still maybe capped between 148 to 149, or maybe to 150. That is actually possible, but I cannot be basically, I cannot trade it to the upside too much. I don't want to be against the trend anyway.
Yeah, it's a short-term trade, actually. As long as, listen, till now, the trend is still down. Despite whatever is happening, the trend is still down. But if we can see any break of that channel down that we're having at the moment, I think it would be a good hit and run. As we said, the slogan of this time is just hit and run. This is the best thing to do at the moment.
You still have 148.50. You still have 150. That is possible.
Exactly, up to 150. Let's talk a little bit about the euro, and all the Olympic games that are happening in Europe are, as far as I heard, they're not doing so well.
The euro, I mean, there's one important thing about the euro. This is the first time since the beginning of the year that the euro has been able to stay above 109 for more than 4 days. Okay, at the beginning of the year, we had 3 days, and then we dumped all the way back down to 106 or 107. Same thing happened also in June. Same thing happened in almost in July. But this time, this is the first
holding,
time. Yeah, we're still holding. That kind of like gives you a little bit, some sort of that the resistance is kind of becoming more less of a resistance, and that might be actually. And if you look at it again in multiple charts, it looks like a flag on the daily chart. And a break of this one would maybe bring us towards 110 or at least 109 109.90. Even though that the ECB is still going to cut rates, but it looks like, again, the ECB and the Bank of England are in much better shape than the Fed because they already started cutting rates before the Fed. But the Federal Reserve on the other side will have to cut faster. It might need to cut also even a larger.
They did promise more cuts actually this year as well.
Yeah, that's right. They're still going to cut at least one more this year, but the market is still looking at how far the ECB will go compared to the Fed. And so far, the markets are basically telling us, or at least Fed Fund Futures telling us that the Fed will have to do more than the ECB or more than the Bank of England. And this is why the euro basically is holding. So I think 110 it is very possible maybe this week. But the thing is, if we actually get to 110,
to retest it, you mean?
Yeah, at least a retest. And if we actually break it this time, this means that the euro is out of the range that we've seen for one full year. And that could be a possibility for a new trend, at least for the next, I would say, for the next 4 to 6 weeks. That is actually possible.
Yeah, we have 1140, an easy target after that if we break the 110.
That is correct.
Okay, let's take a look at the at oil. I can see that WTI bounced back up to 77.60, which is something that we were discussing last week as oil was pricing around 72, 73. Those levels were cheap. The market, we were saying that the market would definitely push those prices up because this is below the average of the previous at least 2 years for oil, and we've seen that we're still trading on a kind of like a downtrend, but we're trying to break it on this Monday. So this Monday we're trying to break that downtrend for the first time since 5/7/2024. So since last month, so the first week of last month. So that's the first time we try to break that. I think we should be the oil should be targeting the next level should be around 79.50. I don't know if you agree around these levels.
Yeah, I agree with that. Don't forget, oil over the past maybe a week and a half, or even 2 weeks, it was telling us it was all about. Despite all the tension that is happening in the Middle East, oil was going down because oil is still worried about growth globally. Whether if it's from China or if it's from the US or even Europe, oil basically was telling us that there is a fear of possible recession, which means lower demand, and this is why oil was going down. Now with this recovery, that's a good one, but you still need to break certain levels, at least when it comes to Brent. We're talking about 78.50. That is more important, but that would open the door for another rally. Just don't forget or try not to chase the move, because this is the 5th day, or we're going up 4 days in a row, including today's trading. If you want to risk any kind of long position on oil, you will have to wait at least a little bit for some sort of retracement. But you have a clear stop. If you're looking for a long-term trade, you have a clear stop, which is the recent lows. At least when it comes to West Texas, we're talking about 75 to 70, 75 to 74. Most likely, I would say 75. But yeah, just make sure you don't chase the market. Give it a little bit more time, because we still have a lot of data going forward.
Perfect. Okay, let's in a minute let's take a look about on the indices. We can see Dow Jones, S&P, and Nasdaq. We did some nice corrections on that. It was a good move so far. We still didn't break the trend that we created, the trend down that we've had for the past, on the daily chart I'm talking. But things, at least we've seen some kind of breaking, like you stopped the rally, the whole drop that we've had before. Now at least there's a break. We can see that the market's stopping at these levels and then taking a breath to see what's going to happen next. Regarding gold, which is something that is really important for most of the traders, and we have a lot of questions regarding that. We've seen gold going back up again, trading around 2,438 at the moment. We can see that there's a lot of demand on gold, despite that there is the geopolitical tension did not increase much. We still did not see any reaction from Iran. There is nothing crazy happening. Okay, there are a little bit of pushing things to the side into Lebanon, but nothing serious so far. We didn't see any huge hits or anything outside the parameters that we're used to. What do you think about gold, Nour, especially after we broke the 24/7, the 24/20, and all those moving averages that
I mean,
we
you know
had
me.
before?
I'm a gold bug, if you know what a gold bug is. Yeah, I mean, gold is still holding also this area since basically you're talking about since April. We go up, down a little bit. We're just holding that. And at the same time, if you open the daily chart, there is some sort of a cup and handle on the daily charts again. But that needs, in order for this to break, we need to get over the record high again. Even technical indicators are still good. They're still healthy. At least it's still telling us that there might be another bull run ahead. We just need to break a little bit, some sort of, the resistance that includes 2,450, and that would opens the way to new record highs. Also, the recent data from last week, which is the commitment of traders report, or the commitment of trader report from the CFTC, it showed a little bit of a downside when it comes to the long positions, but at the same time, shorts were also longs. That's why the net positions are still actually in favor of gold. I wouldn't be surprised if we see another run towards a record high, not just because of the political tensions, but also more likely on the dollar weakness, and the fears of recession from one side, the fears of still that inflation is still high from the other side. So I think there's still a lot more when it comes to the gold trade. Even if inflation is on the downside, gold is still holding, and this is more likely about what's coming next from the central banks, and in addition to the dollar weakness, which plays a lot of, or a huge role when it comes to metals and how metals basically work. So I think 2,450, it's easy. That's basically $10 ahead, and then a break of that, we will get another record high, probably 2,480. That is possible. Maybe this week, who knows? But I think that is still a possibility. And the downside is likely to be limited above the 2,390, somewhere around that. That should be the next support to keep an eye on.
So at least we need to get ready, put our orders over there. Remember, so just try to take as much profit as you can from the market, hit and run, limit your risk. This is what all it is about. So we can be able to survive this last quarter. I think next year would be much better, and we're gonna have much more clarity. I'm talking trading wise.
Fingers crossed, it will be much better.
Yeah, hopefully. All right, we'll see you guys next week on Monday, and if you have any questions, don't hesitate to send it to us. Thank you.
See you guys.